Individual investors rush into the markets, while the big boys head to the exits. Who's right and who's wrong? Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV. First up, don't forget to subscribe to our page. Also, click Show More for additional info and links on today's video. Lastly, Weekend Wisdom, our new series. Check out Dr. Kevin Elko this weekend. Great interview, worth the time. So, the numbers last week. Week ending 11/17. NASDAQ, a little bit of green there. That has been the big boy all year. Dow and S&P slightly down. Let's go to the big charts. So here I'm going right to the Dow theory, where we have the Dow in the back in green and we've got transport in the blue. This is the Dow theory, where we look at Dow and transport hitting all-time highs together, very bullish. Well, obviously we see a big breakdown here. So why is this important? Well, it can be a leading indicator. Here's a transport on a weekly view. You see the upward trend line there, and that's concerning. We are right on it. We need to hold that, or, well, let's see what happens. We've had a negative crossover on MACD below. You look at RSI, relative strength up top. That's not a good looking chart. So I think we definitely need some support there this week, or this is my concern. Here's the transport. I added in the S&P with blue, okay, and you can see it going back to the one side of the chart, breaking down before 15, late 15, breaking down, and boom, it brings the S&P with it. So that's why I'm concerned about this. We'll continue to watch. Speaking of the S&P, yes, consolidation. We talked about this overdue after a big overbought situation. So right now, not surprising, short week, not a lot of trading. So we'll see what happens, but don't anticipate much on the S&P this week. NASDAQ, like I said, we did have a green week there. We hit another all-time high. But again, at the end there, you can see we're definitely in a consolidation mode here as well. I do see the momentum, MACD crossing over there. So it's going to give you the pause or a possible little bit of a pullback before a potential leg up. The next one, market breadth. When we look at this, 200-day moving average, we saw a little bit of a move here to the upside. Not surprising, because the 200-day moving average is sloping up. So I'm more concerned about the 50-day moving average. Here, market breadth, when you're above 60%, it's bullish. Below 40 is bearish. So a little bit of a click, but when you look a little bit deeper, you've got NASDAQ at 59, mids at 61, and small caps at 58%. Each of those around the 50-day moving average. So not strong by any stretch, and well below our highs from August. So we'll continue to watch that. International, not much going on here. What we did see, though, is a break of the 20-day, hit the 50-day moving average, bounced off, came back above the 20 to close out the week. So that's a pretty good sign for the FTSE here, but I think you're seeing a lot of weakness in Europe in general. So we're going to continue to talk about this and watch this one as well. Sectors. First up, we have oil. Been talking about this one for a while. Like this, we finally broke out of our consolidation. It did exactly what we talked about. Breakout, pause, pullback, and then a surge on Friday. So we're going to continue to watch this one. As I've said, we started tiptoeing in here a little bit, looking for a little more strength before I add in a lot of accounts. Healthcare, not a great sector. We did add this at the beginning of the quarter, but at the very least, we held support and bounced off it, so that's a good sign. Hopefully, it looks like at the bottom there, MACD, that we've hit the bottom. We can get a little push up, which is not unexpected to see this consolidation when you go back and see we've had a great run in healthcare this year. So I'm not upset about this. I am looking for a bigger leg up though. Bank index, obviously with the treasuries going down, banks go up. So that's exactly what happened last week. Came down when rates went up, go down, went back up. So continue to like this sector. Here's a new one, telecoms. Wow. Why am I talking about telecoms? Because it's been so horrible all year. It's been one of the worst sectors. Obviously, this year has been about momentum and growth. Telecoms have been left by the side, but we saw some life last week. One, it looks like we found a bottom. Okay, then we had a surge up. We filled that gap there at the bottom. On top of that, I overlaid the Fibonacci retracement. Why? And there's information below on that. Because we're looking for probably getting to that 38% level, and then I think we can really start moving to the next level from there. I mean, I did add it to a few accounts last week, some individual names, the index, and I do like this because we're not always going to be in this momentum growth. I mean, the markets are cyclical, so it might be time to start tiptoeing into telecoms. Treasuries, big story last week. Like I said, we went down to 2.35, but spreads, 10-year minus 2-year down to 0.62 from 0.73 a week ago. That is a big, big move. So why is this concerning, and why do I talk about this every week? Here I've added the weekly view of 10 minus 2s. At the bottom of the chart, I've done a couple things, and I'll have Michelle zoom in there. So one is I've overlaid the S&P, which is behind it. But if you look there, from 1 yield spread to 0, I've highlighted in blue, below 0, red. Just look at the chart. When we get this low, the market follows. So another sign, and when you're seeing this kind of push, I always say the bond market is smarter than the stock market. Are they really telling us something this time? Too early to tell, but we are definitely keeping a heads up on this one. So final observations, we talked about this. You know, this seems like a top to me. Why? Because investors are going all in. I mean, look at last week. Oh my gosh, buy the dip. I missed it. It's that mentality that happens at every market top. And you look at last week, that surge. It's crazy. So at the same time, and again, we're at all-time highs and people are still rushing in. At the bottom is the institutional money managers. We talked about this last week. Down to 50% equity exposure. That's a big move to the downside. You can go across there, see the last time we've done that. So really going to continue to watch this as we go forward. So last week on the data, not a lot going on. Flat CPI, lower on the Empire Index, which was really lower actually. And outside of that, retail sales. We're going to talk about that next week. The death of retail seems to be overstated. Next up, AAII, individual consumers. Big move out of the bullish area. So interesting, you're rushing into the market, but 29% now are only bullish, down almost 16% and up 12% on the bearish side. Fear and greed down to 44 versus 59 last week. Our signals, which help us make decisions on our portfolios. As we said, we went negative short term about 10 days ago. What does that mean? At this point for us, we didn't make any change. Why? We went into the quarter with a little bit of extra cash, feeling we were overbought, and might be able to use that for opportunity or risk control. So we'll see. But our midterm and long-term signals continue to remain positive. As always, thank you so much for watching. Michael Loftus for Wealth and Wisdom TV.